Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This we get everything you need to know in 90 seconds at 9 o'clock, with news investors are wondering where they're at after the sharp falls of the past few days. Wall Street has made a half-hearted attempt today to stage a recovery. The S&P 500 opened up a strong 3.6%, but then lost all of that gain by midday. Since then, it has managed to restore some of it in a whippy trading. They followed overnight European trading, which wasn't positive at all, ending down about 1.5% in most markets. But yesterday, Asian markets all closed higher, with Shanghai up 1.8%, Hong Kong up 1.4%, and Tokyo returned to positive territory, up 0.9% on the day. The ASX 200 was very positive, up 3.1% at the close. But the NZX 50 Capital Index closed down 1.8% in a very risk-off session. There isn't a specific trigger for the rises, but investors seem to have pinned their hopes on policy easing by major central banks and fiscal authorities. And disappointment on these fronts might well see negative trends return, and fiercely. In Italy, the country battling the worst COVID-19 outbreak outside of China, the economy minister there has announced, somewhat informally, that mortgage payments will be suspended for households and SMEs. It is a policy measure they have used in the past in other crises, but interest still accrues during the holiday. The latest compilation of COVID-19 data is out. The global tally is now 116,600 of officially confirmed cases, up 25% in a week. China's cases are up only 0.5% in a week. Cases in South Korea, Iran, Italy are all up 140% in a week, but the growth is slowing in South Korea. The number of cases in the rest of the world have quadrupled in a week. Forget South Korea, Iran and Italy. The real explosion in cases is now occurring worldwide. The new hotspots are now Spain, France, Germany and the USA, each with more than 1,000 cases, up from just a few dozen a week ago. Data on China's struggles to get back to work just keeps on coming. Their busiest coal railway saw freight volumes fall by a quarter for the fourth month in a row in February on very weak demand. But while economic activity remains subdued in the Middle Kingdom, consumer prices, especially food prices, are still rising fast. They're up an overall 5.2% in February, with food up 16% year on year. Pork was more than doubled in price in a year, while beef is up 21% and lamb up 11%. The pain only affects consumers. Producer prices were flat in February, actually marginally lower. In Australia, consumer confidence is waning. Well, waning may be underselling it. It has fallen rather sharply. Aussie business confidence is heading south as well. This revealed negative sentiment following the bushfires and is yet to factor in the coronavirus impacts. New Zealand business confidence falls are also being recorded, and the change low has been described as awful. This New Zealand survey is catching coronavirus signals. US Treasury 10-year yield is now at 0.68% and recovering all of yesterday's steep decline. The American rate curves are now all positive for the first time in a while. And gold is sharply lower today, down $15 to $1,565 an ounce. US oil prices are still very low, but have bounced off Monday's depths, up $1 to just under $34 a barrel, and the Brent benchmark has bounced a little more to be just under $37.50 a barrel. And the Kiwi dollar will start today reversing yesterday's gains, down 1.25 cents to 62.5 US cents. The greenback is recovering. On the cross rates, we're up to 96.6 Australian cents, and against the euro we're little change to 55.3 euro cents. That means our trade weighted index is now at 67.5. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.